Hi everyone, today let's talk about Apple earnings. Then we'll take a look at this massive intraday reversal that we got, pushing back to the lows from 2 days ago. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Apple sales rose 5%, topping estimates as iPad and services revenues jumped. You can see after hours it did give back some of those gains, but still up after hours. iPhone, which accounted for 46% of the company's sales, continues to remain the most important sector for this company, and this should make Tim Cook pretty happy. EPS did beat estimates, revenue beat estimates, iPhone beating pretty well, Mac revenue right in line there, iPad beating, wearables beating, as well as services revenue beating, and then gross margins also beating. So beating across the board makes sense why Apple was up a little bit. Maybe the forward guide wasn't strong enough to keep all of the after hours gains. The growth in this company has continued to slow here over the past several quarters, but this is still a behemoth and they still pull in a ton of money. Net income $21.45 billion during the quarter versus $19.88 billion just a year ago. So still a very strong quarter from Apple. Moving over to fear and greed, you can see we're back down to 40. What a massive collapse from the previous day. We were at 54 and now we're down to 40. Back to neutral on momentum. Strength continues to grind higher, even with the price action. Pretty odd there. This is on the NYSE. Maybe it's doing better. I don't really look at that. And then breadth. Back to neutral. This was in greed. Put call ratio still hovering here around 0.77 or so. And then looking at volatility, spiking back up. We did expect it to, but I thought we would get one more down move before we got that bigger spike up, hold the higher low. Ended up spiking much sooner than I thought. And you can see safe haven demand, extreme fear there. Junk bond demand going into fear here as well. So market's definitely fearful, and we're not seeing nearly as much greed on the main indicators. Moving over to earnings, you can see Apple beating, Amazon did not. They missed on the top line, beat on the bottom. Amazing how much money they make there. Obviously, their margins are not nearly the same, so that's why they don't make as much money as Apple, even on much more revenue. And then ConocoPhillips, same thesis, missing on the top line, beating on the bottom. Dominion Energy, same there. And then Federal Realty, huge beat on earnings. You like to see it, beat on both the top and bottom lines. And then for tomorrow, you do have some of those big oil companies announcing pre-market. So it'll be interesting to see how those play. And then you got Church & Dwight. And then if you hold anything into the end of the session, all of this stuff is after hours tomorrow, except for Tyson Foods. And then we do get Realty Income there, one of my favorite companies. And then looking at the economic calendar here, you can see unemployment rate for the Eurozone stepping up to 6.5. We'll see if that's a precursor to our own data. Initial jobless claims spike massively, 249,000, way worse than expectations. Previous number was not revised up, but if that is going to start to climb here and maintain those moves, that is definitely going to be bearish and probably not give us the soft landing that markets have hoped for. Economic data, global US manufacturing did beat just barely. ISM manufacturing employment missed pretty substantially. Manufacturing PMI also missing, and manufacturing prices went higher. So not what you would want to see. The PMI going down while prices are going up. And then Fed GDP also not great from the Atlanta Fed. And then Fed balance sheet also rolling off just short of 30 billion. And then for the Friday session, we have all of this unemployment data. We'll see how that plays. Could absolutely push around markets. It'll be interesting to see if we get that step up from 4.1 to 4.2 or potentially even worse. Moving over to Max Pain, you can see we're almost to the bottom of the calls. 539 is really what I would call it, so just about $1 lower. And I think it's actually falling after hours, so we're probably already there. We'll see if we get a push towards Max Pain for tomorrow, potentially. Total options, 763,000, so not a ton. Put wall, 540, we're basically right there. Put call ratio, still relatively low at 1.8. And then call wall all the way up at 552, so we're definitely leaning towards the bull side on Max Pain. Moving over to the charts, what an absolutely colossal day. Straight down, red bars almost across the board here on the hourly chart, except for that first one. Pre-market rallied, made a slightly new high, and then we fell throughout the session right to that 540 level, took out 550, 544, and now 540 right there, right at the same low that we saw on Tuesday. You can see that 55-day moving average continues to be support, wicked the level, wicked the EMA, held the level. Held the EMA. Volume ramping here, so that's not what you would want to see on the down day. Again, I still think we're going to touch this trend. I said it before, I thought we were going to get it on the Wednesday, but we ended up getting that massive gap and go, hit the 21, gapped a little bit higher, and then gave it all back, pushing back, and I do think the trend is probably where we're headed. 537, touch that level, and then we'll see what happens from there. My guess is that we'll get at least a little bit of a bounce just based on max pain, but who knows? Markets have been super volatile over the past couple days, and it could do anything. Moving over to the Tasty charts here on the daily, you can see we hit that midline, pulled back to the 55 EMA, touching that same zone. Lowest ATR is 531.33. That's sitting right there at that 89 EMA. So if we get the continuation here on the daily chart, that's what you would expect. Got to see that 541 area break on a daily level. Haven't seen it break yet. Every time we get into the zone, we get a rejection higher. And then looking at that 4-hour chart, you can see mixed signals, right? So we had this down move here, broke it yesterday, gave it all back, broke it again to the downside, and we're back into bearish conditions. Lowest ATR band here is around 534.55. At this point, looks like more consolidation with just really high wicks to both directions. Support area 540, resistance area up around 554. So wide ranging consolidation, and we really haven't seen a good break in either direction yet. Moving over to the NASDAQ, basically the same thesis, rallied up, hit that 200, thought we might break it here pre-market, and we did technically on that 8 o'clock hour, closed above it, sideways candle, immediately broke below it, and then straight down for 5 hours in a row. Absolutely colossal. Didn't quite hit this previous low, which is slightly bullish. Didn't quite touch the level. And after hours, we're still holding that and looking a little bit higher at the end of the session. Interesting to see that here. Daily chart really showing the same structure, same consolidation. High is 471.93. Can't seem to close above that. And then the low here, we got these multiple wicks holding that zone. And then if that 454.40 level breaks, we're probably headed down to the 144, which is sitting at 446.95. Then we'll see what happens from there. That takes us all the way back here to the lows from the end of May on a closing basis. So we'll see how it plays. It's also worth mentioning, you can see since this down move started, we've been seeing a lot of volume happening here, which could signal that this is a longer term top and that we could expect a deeper cut to the lows down around that 200, maybe all the way to that 429 area, which would bring us all the way back to those consolidation highs from the end of April. Moving over to the Tasty charts here, you can see we're still right at that lowest ATR band, very close to it. The lowest ATR is 453.74, so just a couple of dollars lower. And with the after hours price action, we're basically there. And then you got that 144 EMA sitting there, 446.50. Again, huge volume over these past couple days. None of them really on the bull candles, just a little bit yesterday, but nothing crazy there. And then you can see momentum swinging back to the bull side, which is pretty interesting considering the big bearish move. Saw this consolidation of EMAs as resistance. Concerned about that yesterday. Thought we could get to the upper ATR band around 480. Didn't quite get there. Pulled back, and then you can see back into bearish conditions, ATR stop above this previous high. And you can also see big volume on that last candle, which is interesting as we got into that ATR stop on that 11 o'clock candle right around 457.50, which is these previous lows. That's when we saw some volume coming through. So something to consider. Maybe this bottom is going to hold, but if it doesn't, that lowest ATR band is sitting down around 449.07, which is definitely within striking range on the next two 4-hour candles. Moving over to the Russell and the Dow. Russell also had a terrible day, 3.25% to the downside. Hit the level 215.42 and the 21 EMA. Caught a little bit of a bounce from there, down just a couple of cents after hours. Momentum bearish, volume bearish. It'll be interesting to see how this moves on the unemployment data tomorrow. And then you can see the Dow. We got into that wick zone, rejected from there. Probably should have expected a bigger move down, which is what we got. 1.2% hit the trend. We'll see what happens from there. If that breaks, we're probably headed back to that 398.76 level. Moving over to the Mag 7, you can see we did get all the way up to that 21 EMA. Huge gap, huge rally up to that level. The close yesterday was 260.64, and then that 21 EMA on this last candle was sitting up at 270.29. So you got like a $10 gap and go to that level, and then gave it all back to finish down 0.5%. Or $1.26 on the day. So not great there. Selling after hours. Probably headed back to this consolidation low down around 252. See how it plays from there. If we're going to head down to 249 back at this trend line, or if we're going to hold that level and see a little bit more consolidation. Hard to say at this point. That was a huge wick up, but definitely a powerful rejection as well. Moving over to Apple and Microsoft. Microsoft, again, very similar to the Mag 7, almost touching that 21 EMA. Gave it all back, hit this consolidation here. Up slightly after hours, about $1, nothing crazy there. If we can get back above this trend, maybe we see a little bit more push. Then we could see these highs potentially up around 230. See how that plays from there. Critical zone, if it breaks down, probably headed back to 211 or so. And then looking at Microsoft, this continues to look terrible. They had terrible earnings and it's continued to sell off. If this 413.36 level breaks, which it has tested the last 2 days in a row, then we're probably headed to the 200, sitting at 403.44. Moving over to Amazon and Meta, you can see Meta did very well on their earnings, up 4.8%, gapped all the way to that 420 area. That's where we thought it was going yesterday after the after hours price action. Momentum swinging to bullish, volume bullish, RSI bullish. So we'll see if it can hold this level and start to push. Meta seems like one of the better places to be right now. And then you can see Amazon, it was down 1.5%. It's all the way down to 170 after hours. You can see that here, big selling, taking out levels. The next level is 167.06. So looking at that on the daily chart, that's just below the 200-day moving average. And at this point, you would expect to get there and probably overthrow it to the 167 level, which is this same level from the wick low at the end of April. Moving over to discretionary and staples, you can see staples rallying nearly 1%. This consolidation continues to look strong, still looking at 79.90. It's taken a long time to do it, but I still think we'll get there. And then discretionary is cratering 2.5%, momentum bearish, volume bearish, RSI bearish. So still holding this trend line, still holding the highly traded zone, but I would guess that we're going to push through those levels. After hours, it's down on the Amazon move, down to that 180.18 level. So basically right at the level 180.10. And then below that, you got 144 EMA at 179.50, just below it, and then the 200 hovering there at 176. I would honestly say the 176 level is more likely over the next couple of days, probably not just tomorrow. Moving over to utilities and oil and gas here, you can see utilities rocketed higher 1.8%. We've been talking about this over through this previous high. Everything looked good for that 74 level, and it did. And then oil and gas stocks. I took this trade off when the level broke, so I did capture a little bit of profit. And I actually put it back on here around the trend line, just below it around 142.30. We'll see how that plays tomorrow. Big volume, momentum bearish, but I still think this zone is potentially strong. Touch the 140.88 level, touch this previous trend, and then reject it a little bit from there. Again, critical zone, critical consolidation, could still hold. Structure is not completely broken yet. Moving over to RIOT Marathon, these look terrible. They've been looking terrible. We said they look bearish. They looked bearish yesterday. They look bearish today. RIOT bouncing a little bit from the trend, but looks like a terrible candle. Both of them down 8.5 and 7.7 respectively. Momentum and RSI bearish. I'd be cautious on these, which is quite a bit of an understatement. Moving over to Breadth, we're seeing Breadth break down here. So we've been holding even with the bearish price action, and now we got a Breadth breakdown. So the trend line broke on the 20, 50-day broke this level here, touched the 200 briefly, momentum bearish, RSI bearish on both of these. So more bearishness likely to come. Moving over to the dollar here. The dollar caught a bounce after the big down day yesterday, pushed back to the 104.4 level. Slight bull trend on the short time frames. Medium time frame here, slightly bullish momentum. RSI slightly bullish. You could argue low, higher low. I've been bullish on this. I thought we were going to break out here. We gave it back. Like I said, this is arguably a higher low here now. See if this pushes up to 105. Still needs to break this level here. Super dependent on the unemployment data. If unemployment data comes in weak, we'll probably see this dollar crater a little bit. If it comes in strong, maybe we see that dollar push. Moving over to yields, these cratered as well. 2-year, quite a lot, 2.5%. 10-year, 1.36. So we're seeing that re-steepening, seeing that normalization. Both of them are super oversold. You can see 2-year at a 19.2 RSI, super low. 10-year also down 28.87, and it's at a level here, 3.97. Touched that level today. See if it bounces a little bit from there. But I would expect this 2-year to continue to crater, and then we're going to see that re-steepening. Then we got a couple of months before we start to see weakness if it comes, or determine if we actually get the soft landing. So see how it plays. Moving over to bonds, J&K cratering makes sense. Island reversal, gap and fall, probably headed to 94.82. Took out VWAP, took out the 21. Momentum bearish, huge volume. Makes sense. And then looking at TLT, gapped and rallied. It's up more after hours. Huge volume. Looks like it's headed to 96.50. We've been bullish on TLT, been buying bonds in my other accounts. Definitely think this is going to push. And then you got the trend line here, 97.80. Is probably your next target. Moving over to volatility, both of these spiking as you would expect. VIX got all the way up to 1948. Been looking at 2250 as the level. I thought we'd get one more leg down or at least a wick down to this zone before we saw that spike. Didn't quite happen. Got a reversion back to bullish. RSI bullish, so you would expect at least one more push here. Looks like markets are quite bearish going into tomorrow's session. Moving over to my accounts, you can see I lost a bunch of money, as you would expect. Big down day. Not as much, I guess, as I probably should have. Almost $2,200. Qs were down 2.5%, so I didn't lose a full 2.5%. So that was okay, a little bit less than markets, but should have done better. Really, the Russell was what pulled me down here today, actually. The Russell was down 3.5%, and my covered calls there were not quite enough to cover all of that. And I did roll down, still did okay, but we'll see how it plays in tomorrow's session. You can see sold at $2.17 for tomorrow for $1.89. And then the Qs here, I took my shares off and then put them back on at the end of the session. Sold a $4.58 for tomorrow for $4.50 credit. Huge volatility going into this unemployment rate news. We'll see how that one plays, plus the Apple and Amazon earnings. I did sell this beforehand. You can see it is down about $2, a little bit less than $2 since the market close. And then you can see XOP here, $17 on that for tomorrow at 142. We're basically at that point. So closed it for a slight profit, put it back on much lower. So good trade there. 82 cents potential profit, 82 cents credit on that, and I'll be watching it tomorrow. Overall, probably more bullish than I should be. I'll probably make some adjustments quickly in tomorrow's session if we start to see more cratering, which based on everything looks likely. Let me know down in the comments section what you think of Apple. Is it the place to be, or is it just a safe haven at this point? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.